think we're
Good morning, everybody. It's Friday, April 5th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had May corn up 1 3/4 at 437. May soybeans were down 1.5 pennies, 11.78.5, and May Chicago wheat was up 12.5 overnight, 568 3/4. This morning, we had a jobs report out. Came back shockingly well above estimates. Non-farm payrolls were up over 303,000. They were looking for kind of 200,000 as an estimate. The unemployment rate stayed steady at 3.8%. Outside markets rallied a little bit off that news here once that was released. Good morning, guys. It's Friday, wrapping up the week here. Nothing in the way of overly fresh news. I think we've seen some escalations and tensions ramping up again, between Ukraine and Russia. Dustin, we were talking just a little bit before the show. You look at a wheat chart and we're starting to bump up against, some technical levels where if you were to continue to see strength, it looks pretty good on a chart. So maybe kick us off there. We'll talk a little bit about that. We also had another, sharp, I'll call it a sharp drop in open interest overnight. Corn open interest was down 13,913, while bean open interest was up about 8,700. So a couple things to chat about here, but we'll let you kick it off, Dust.
Yeah, thanks, Dan. Yeah, wheat's up 12 overnight in the Chicago contract, and I don't think coincidentally beans are down a little bit. Still that inversion between wheat and beans that we continue to see. Yeah, a lot of weakness in wheat over the last couple of months. And really this time of year, as we head towards harvest, that's usually kind of the lowest time of year on the seasonality is like, as we head into summer and get ready to that gut slot of harvest. However, it's just been downtrodden. Compare that to the last 2-3 years, wheat prices are obviously, quite a bit lower than they had been. So to see this bounce and technical bounce, not that surprising. As we go into the week, I did want to mention, though, too, open interest has been dropping on corn. And so, we're going to get that COT report this afternoon as of Tuesday. But even just in the last couple of days, open interest has been starting to drop. It could be that we're starting to see, this is pure speculation, but maybe the funds are starting to reduce some of their position. They've been very short corn. That might explain some of the recent moves and the drop in open interest. That's just something we'll have to watch for over the next couple of COT reports.
That's interesting. And it's amazing how such a large position and it doesn't move it much, right? I mean, we're kind of chopping around in this range post report. So I think people think, funds get out and it's got to be this really sharp, diabolical type of rally, and it's not always necessarily the case.
Well, I think too what to look for there is just if it's a major change of ownership, which we'd expect at some point. We know the farmer was the natural long, the funds or the short. So if you start seeing a big change of ownership around these moving average levels, kind of decent rally off the lows would make sense. Make it for a healthier market going into the season, in my opinion. So I'd like to see that happen for sure. It doesn't have to just be the funds, if the farmer still has to sell corn, so I think we have seen a lot of farmers selling after the report. We had a big spike higher. I think we absorbed 2 to 3 days of good farmer selling, probably in the face of, some fund buying, so that's probably why we're kind of consolidating around these areas for right now to digest some of this move and rebalance a little bit of that ownership.
All right. Well, you look at, the things I'm looking at, that kind of 10 to 14 day weather outlook looks a little bit more friendly for guys to get rolling, heat up a little bit. I know we've gotten pretty good moisture through a lot of parts of the belt the last couple of days. So that'll be exciting. I know guys are ready to roll. We've gotten some progress down through the south, but by all estimations, it's not like we're going gangbusters at this point yet, but that'll be good for guys to get this thing rocking and rolling. But
yeah,
yeah,
agreed.
Yeah,
Agreed.
I mean, we're pulling for everybody here. It's Friday. Like I said, not much to talk about. Rylan, we've got you back. The earliest war room's ever gone to cattle.
Yeah, geez,
I can ever remember. That's a real slow day on our side. No, man, we were talking. You got bird flu kind of out in Ohio now, so
Yeah.
you're 6 or 7 states. Most reports, it's still it's not a dire situation in terms of humans, but it continues to spread. And we were talking just about what the market sentiment this time of year, and then you throw a story at it, what that looks like.
Right. You got kind of a lot of factors kind of working against the market right now, a lot of headwinds. I mean, this week is typically pretty much between now and the end of May is kind of a seasonal vulnerability for price action. So, I mean, like you're coming into April option expiration today. So you got a lot of money that's going to be changing hands here. Then also you got Monday as first notice day. So I think any kind of longs that are still in April are really going to be looking to either exit or move forward. So I mean, like it just overall, the front end of the market's definitely going to be kind of under pressure, even in the face of kind of relatively decent cash prices, compared to last week. So I mean, we did see a 3,500 contract down in open interest on the live side. So I imagine that's mostly liquidation, just probably has nothing to do with this new case of bird flu. I mean, I think that right now the market's still going to be hyper sensitive to the headlines, and some of the speculation is just surrounding how fast it's going to spread, the impacts in humans, where it's coming from, how this is possible. I mean, there's still just a lot to know, and I think the market's still kind of digesting at this point. But I mean, just overall in terms of day-to-day fundamentals, one of the bigger headwinds was February exports of cattle and calves were just massive. We were coming in at 181,000 head. So we're up about 25,000 head from the same time last year. So with this high price, we're really bringing a lot in from Canada, a lot in from Mexico. So I think this is something on the longer term timeline that's really going to be kind of, once again, a headwind to kind of deal with, but this could be further down the road, of course. But as you can see, the price action has kind of been pretty weak overall in the live side of the market. We really haven't seen too much of a down in cash. In fact, most of the cash trade right around 186, 187. It's going to be about $1 higher. On the other hand, the rest has slipped about $1 or so. So, I mean, like you've got we're kind of up in the air right now. There's big down in beef last night. So we'll see how we open here and close out the Friday. I think everybody's going to be a little bit on edge because of these, these reports of bird flu. But we still just, at this point, it seems like we're going to see more spread. We're going to see this pop up in other areas. And I think the market is coming to grips with that. So we'll just kind of take it all in stride. I think you have to. On the other hand, the hog market, we're kind of in this seasonal up. We've got April right up against contract highs. We're coming into expiration there in the next couple of weeks, or in the next 2 weeks, sorry. And then the focus is going to be on June. This has really represented our best seasonal demand time frame, and right now you can't really stop the move in cash right now. It's just been kind of on this grind higher, and same thing in pork. So I mean, like grilling season is around the corner, trying to digest all this news. And I think just since the hog and pig report, you kind of traded the worst sentiment we've seen, and then the market's been straight up since then. So I mean, there's good reason to protect yourself, but it just seems like between now and kind of the end of August, the market is highly likely to kind of stay up, just supported by just domestic demand here. Export demand was a little bit on the weak side. We thought, just kind of looking at the weekly exports, but overall it's just domestic's going to be the focus for right now. So that's all I got, Dan.
Hey, Rylan, I got a question on that though. So, bird flu's obviously been around for a long time. A lot of countries. Yeah. We've seen crossovers to different animals, right? We've seen it to hogs. Is that right? We've seen it to, so I mean, we've also had animal to human transfer before. So why is the market so keen on this one?
Well, and I think it was just because it essentially was contracted in this dairy. The person, it was a cow to human transmission, which I believe is the first time that's ever happened. I mean, there have been several cases. I think not many though. And I think that was the problem, is that like this doesn't happen very often, animal to human transmission of any virus, and this is what the big fear is. This is what, you can go back to the early days in the pandemic, and what caused this and why it's so sensitive, because these are the kind of diseases that turn into these kind of bigger deals. And the reason why the market reacts so aggressively and strongly to it is because one, it's just a risk-off situation. But of course, like if we have to start culling herd, if the buyers have to start scrambling to find a supply that is not sick, or if they have to shut down plants for sterilization, or if they have to find new workers, or if some worker dies, like the liability, there's all these questions that surround it that provide just a huge amount of concern for the market to deal with. There's just no question about it. That's a lot of the times you'll get people say, well, isn't this going to, down the road, isn't going to cause a huge hole in supply? It's like, well, we have to be able to quantify that number. Usually in these kind of environments, especially with things like, you go back and look at African swine fever, for example, in China, we've realized that they treated it differently, like that we would treat it, I imagine, but like that required a massive call.
Right?
Yeah.
They killed them. They killed them and then they ate them.
Right. So it's just, usually you see a heavy amount of liquidation with some kind of big disease kind of issue, or some kind of isolation measures, but it definitely creates some real logistical problems for the industry.
Well, how does that happen too? We're already tight on numbers, right? As far as like feeder cattle,
Right. Nothing that the market doesn't already know. I think at this point, the market is more so, and that's why I say I think the import market is really where we're going to make up for a lot of this tightness, and where it has been made up. And then also, on the other hand, you look at weights. Weights are the highest they've ever been for this time of year. They're trading contra-seasonally. Cattle weights should be dropping like sharply right now, pretty much into the summer, and they've done nothing but go straight up for the past couple months here now. So and that's just largely because we had a really light winter, and feed prices took a nosedive. So it all made a lot of sense while these guys are just keeping everything on feed that they possibly can, and just feeding to these heavier and heavier weights. Just get more bang for the buck, it seems like. So it's kind of created this equilibrium right now, which is just like, we know we're tight, but we know we're also getting cattle from other sources, and we know we've got these big weights. We're slowing production, so you've kind of got that. Give and take a little bit with supply and the demand side of things. We've always said it in this industry: high prices cure high prices. But is this a high price for this supply tightness? Hard to say, but it seems like the market's really struggling right now to get its feet underneath it.
So is the industry concerned, as far as bird flu, go back to that for a second.
Yeah.
Is the industry concerned with just dairy? Are they concerned with all livestock?
So the rumblings that I've heard, the big concern right now is in the dairy herd. It's not in the beef supply at this point. I could be wrong about that, but that's the impression that I'm under. And these guys knew about this weeks ago. So I think that they've got whatever coverage they need at this point to kind of weather whatever storm is in front of them. So if all of a sudden, all these cows just stop producing milk, these producers do have coverage. These big buyers, they do have coverage. The commercial side of the market has been well aware of this for a long time. So I think this is, in my opinion, it's more impactful on the dairy market, unless for some reason cattle start to die. Right now,
makes sense, right? Because the dairy is like the chicken being enclosed.
Right. If there's a change in supply numbers on the cattle side, I would see that having a much different effect than what we're seeing now.
So are we not seeing cows dying?
No, we're not. We're seeing decreased lactation sickness right now. They're taking whatever measures they can take to really kind of stop the spread. Anybody that's got a dairy or anything like that. But right now, it's not going to be. The big concern on the beef industry was that we're going to have to source cattle from other areas, or these dairy cows are not going to make it into the beef supply. So how are we going to deal with that? So that was what the big concern was, and I think what it still is for right now as we get to know more and how fast this stuff spreads.
Well, and just coming from like a layman's side here too, like there was some fear mongering articles out there. It seemed like where they're talking about, it does have a really high human death rate. It's over 50% since 2003. There's been a couple hundred cases. And, so immediately you're seeing mainstream media articles pick up how this could be 100 times worse than COVID if it really did cross the barrier.
Well, New York Post is like not like,
yeah,
like,
not maybe not.
Cite your sources.
It's people. Maybe these are the people that are not eating meat anyway, but people probably be, do we have to worry about public perception about the actual consumer stopping to use some of these things?
That's what the market, I think, is really concerned about. I mean, I don't know enough about how deadly this can be in people and how fast it's going to spread human to human, or if it is even going to. But yeah, I mean, I've seen the articles too. I don't know enough about them. I mean, I know we all went through a pandemic, so I think that everybody's still on edge, but I mean, I think we know to kind of take some of the initial impressions of how bad this can get, just maybe with a little bit of grain of salt.
Are we putting masks on the cows?
I think we need a mask up. It's not a bad
6
idea.
feet? Is it 6 feet between cows now?
Call in Rancher Fauci to help.
In all seriousness, like let's just say there is like some sort of public panic about this. If one other person gets it, like that probably would be bearish grains, in my opinion, just from perception. That could have been.
I think that'll be bearish just about everything if that really starts to happen.
So that's I think one just kind of mistake to learn from COVID is to not maybe underplay this. If it does start to pick up, like we're going to probably need additional coverage. Just in case, right? Just because we can't afford to have another, even just half of what COVID was. COVID was a massive sell-off for corn, counter seasonal, before we ever had any chance to see what the market's going to do. I'm not suggesting that would be the case now, but there might be some preventative ways for our client base to maybe get some more just insurance type coverage. I know we've hit the bean side pretty hard, but maybe even potentially. And I'm this is off the cuff, so it's not a recommendation.
Yeah, it's interesting because, I'd be curious how the market reacts, right? The stock market sold off, crude oil went negative. The whole market went into, we're never going to do anything again. So I'd be curious to see the reaction second time around. Like we might all be numb to it too.
Right.
Maybe wrongfully so, but I'd be curious to see how we do react. But I agree, Dustin, like if you can't put that past the market that you start penciling in, what if we never have another dairy cow, or we're never going to feed any more corn?
Yeah.
Right. Well, hopefully the spread slows down and we don't have to, take any drastic measures here. But I think the market's going to be overtly sensitive to any kind of, human to human kind of transmission at this point, if it does indeed come to fruition that way.
Oh, very good. Thanks, guys. That was good stuff. We just came into the open here. We got May corns up 2.5 now, 437 3/4. May soybeans are up 3 at 11.83, and May Chicago wheat's up 12 3/4 at 5.69. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Hope everybody has a great weekend, and we look forward to talking to you next week. Thanks.
Thanks.